Okay, let's take a look at this process costing problem, which deals with with putting together the work in process T account or general ledger account, and it also involves a cost of production report. Okay, I'm going to read the information in front of you. Dayton Aluminum Company uses a process cost system to record the cost of manufacturing rolled aluminum, which requires 4 processes. Okay, the inventory of work in process rolling, okay, that's one particular WIP account for the rolling process on September 1st, 2008, and debits to the account during September appear below. Okay, so what we see there, now to the left of my mouse I'm reading here, is that the balance on September 1st was 4,000 units. Looks like 25% complete, 1/4. Direct materials were $41, 4,000 units were complete. Conversion, 4,000 units times 1/4 at a cost of $12.30. So we have a total balance of $176,300. And you see that just to the left of where my mouse is. Okay, then from the smelting department, it looks like we had 150,000 units totaling cost of $6,195,000, and this is what were involved in debits to the account during September. Also, direct labor was debited $773,780, and factory overhead was debited, totaling $1,138,900. During September, I'm reading to the left of my mouse here again, 4,000 units were in process on September 1st, were completed, and of the 150,000 units that entered the process, all were completed except for 6,000 units, and those were 4/5 complete. Okay, so we've got some charges to work in process for October from the smelting department for 165,000 units, $6,930,000, direct labor of $824,500, and factory overhead of $1,242,530. Okay, so I'm just reading this table data here. And proceeding with the reading here, during October, the units in process at the beginning of the month were completed, and of the 165,000 units that entered the department, all were completed except 6,800 units that were 2/5 completed. All right, now let's take a look at the instructions. We need to enter the balance as of September 1st, 2008, in a 4-column account for work in process rolling. And we're going to record the debits and credits in the accounts for September. We'll construct a cost of production report, and we'll present computations for determining the equivalent units of production for material and conversion. Then we'll compute the equivalent cost per unit, the cost of goods finished, and we'll differentiate between units started in the prior period and units started and finished in September. And then finally, we'll construct a cost of production report to show the work in process inventory. Okay, let's get started on this one. And rather than having me enter all of this data into Excel, I'm going to work with the published solutions and explain them as we go. So let's slide up and make some room here. And we may have to move the screen up and down a bit. Okay, so the first thing I want to do is highlight that we need to put together a cost of production report for the rolling department for the month of September. Okay, so this should look familiar now. We enter the units, then we have separate columns for equivalent units of direct materials and conversion costs. Okay, first we need to figure what were the units charged to production. And they told us there was 4,000 in beginning and 150,000 units were received from the smelting department. Now, it says that up above. If you need to go back and read that, pause the tape and do so. All right, let me move on down. I say pause the tape. I guess it is a online flash video, but you certainly have the pause button available on the black strip along the bottom as you watch this. Okay, so there's the 4,000 units, the 450,000. So if we've gotten that far, we've come up with the total units accounted for by the rolling department. All right, let me slide a little bit more to give us a little bit more room, because then we need to determine what are the units that need to be assigned costs. Okay, so what we've got to do is figure out what were the various categories of units we had. Well, we started off with inventory in process that were a fourth complete, and they told us there were 4,000 units. Okay, now, when we're talking about what was completed during the month of September, none of those in beginning relate to an equivalent unit for the month of September. That's why we have a 0 right there. That work was performed in the prior period. But if only 1/4 was completed, then 3/4 was completed in the current period. So to come up with that $3,000 right above my mouse, we would take the 4,000 units and we would, take 4,000 units times 75%, right, which represents the 3/4 of conversion units that we did complete during the current period. Okay, then we need to figure how many were started and completed. Well, since we know we have to account for 154,000, and we knew that there was 6,000 in ending, then we can figure out that 144,000 were started and completed. Now, the other way to calculate that is to take the 150,000 units that were received from the smelting, and they told us that all but 6,000 were completed. Okay, so 150 less 6,000 gets us the 144,000 right above my mouse there. And since these were all started and completed in the same period, the equivalent units for both materials and conversion are the same, the full 144,000 units. That's why we carry that number over. Okay, then we need to figure out how many of them were transferred to finished goods in September. Okay, well, we just add those two together, right? And that's the amount that were transferred to finished goods in September. And we need that number. But the last piece we need to account for is the difference between the 154,000, which is total units to account for, and the 148,000 that were transferred to finished goods that we've already accounted for. And that difference is 6,000 units. And that difference is the 6,000 that remained in ending inventory. So in ending inventory, all 6,000 of equivalent units of material were already constructed this period, and that's why we count that in the equivalent units for this period above my mouse there. But they were only 4/5 completed with respect to labor and overhead, or the conversion costs. So we would take the 6,000 times 80%, and we come up with 4,800 equivalent units for conversion, which appears above my mouse right there. Okay, once we've got that far, we're essentially done with the cost of production report, coming up with total units to be assigned and total units to be accounted for. Now let me slide down a little bit and we'll show the footnotes that I talked about above, is how we came up with the 4,000 units, or the 3,000 units, which is that note on row 11, and the 144,000 units, which is all of what we see on row 7, that we see right here to the left of my mouse, explained in row 12. And then the 4,800 units to the left of the mouse right there is explained in row 13. Okay, now I've moved the screen a little bit where we'll start working on the costs, or the cost portion of putting together equivalent unit schedules. Okay, so we now need to account for the total cost for September. And in the information provided, we were given $6,195,000 as the total cost for September in the rolling department. We also know that $1,912,680,000 relates to conversion. Okay, now I slid back to show where those numbers come from. There's the 6195 right there relating to the cost from the smelting department, and the combination of adding the direct labor and the factory overhead, those two numbers right to the left of my mouse, make up the conversion number. Okay, so now we're back to looking at the screen, the schedule that we're working on. We next need to add in what were the total equivalent units, which we calculated above. And with respect to direct material, from the schedule above, we came up with 150,000 of total equivalent units. Let me slide up and I'll show you how we came up with that. That's that number right there, right? From our schedule, 150,000 for equivalent units that we calculated earlier, and 151,800 for conversion. So we drop those here and here, then we divide the costs, right? Take the cost divided by the equivalent units, and we come up with 4130 and 1260 is our cost per equivalent unit. Then we need to figure out what's the cost charged to production. Okay, well, we had inventory in process at the beginning of 176,000, and we had costs incurred in September of $8,107,680. Okay, now that $8,107,680 is simply the sum of the to the left of my mouse, the $6,195,000 plus those other two numbers which summed to the conversion number of $1,192,680. Okay, and that's how we come up with the 8,107,680 number. Alright, so once we know that we have the inventory and beginning cost plus the cost we've incurred, we're able to come up with the total cost accounted for in the rolling department. So that's our total cost that we need to figure out where it needs to be allocated. And the next step is the cost allocation to the completed and partially completed units. And I'll slide up to give us some room. Okay, first we had that inventory and process balance of 176,000, right? And we had costs that need to be allocated to complete inventory and process. And now we're assigning $37,800, just above my mouse, to the conversion cost portion of completed inventory and process. Okay, well, where did that number come from? We need to take the 3,000 units and multiply them times the 1260 conversion rate. And that's how we're coming up with that. Okay, now where did the 3,000 units come from? Okay, sliding back up to our first schedule, the 3,000 units represents the equivalent units that were part of conversion that we produced from the beginning inventory amount. Okay, let me slide back down. So 3,000 units times the 1260 rate that comes to the left of my mouse gets us 37,800. We add that across. We've taken care of the conversion costs of the inventory that was on hand at the beginning of the year. Now on row 12, we need to figure out what's the cost we need to apply to those units that were started and completed in September. And this is a relatively easy calculation at this point because in this one we know that we had 144,000 units that were both started and completed, and we multiply them times the cost per equivalent unit above. Okay, where'd the 144 come from? Let me slide up. Oh, went the wrong way. That's our started and completed, 144, 144. Okay, so that's how we come up with those numbers. 144,000 times 4130 for direct material costs, and 144,000 equivalent units times 1260 for conversion costs. Okay, if I move this down, then at this point we can put a subtotal that says what were the total costs transferred to finished goods in September, and we can add up those costs and we come up with $7,975,700. Next, we need to assign the equivalent unit cost for the inventory and process. And here again, we need to figure out how many units apply and multiply it times the cost per equivalent unit that we calculated at row 4. Okay, so in this case, I believe we had 6,000 direct material units and 4,800 in conversion. Let's go up and check that. Sure, yeah, there's our 6,000 units. Let me slide up so you can see all of it. 6,000 equivalent units applied to the inventory and process at the end of the period, and 4,800 represented the equivalent units of work performed during the month of September for conversion costs. So we use those rates to multiply again by the 4130 and 1260 for direct material and conversion cost respectively, do the multiplication, then add across, and we come up with the inventory and process. And when we're done with that, we've accounted for all of the cost, and you see that the $8,283,980 matches the $8,283,980 of total cost to account for in the rolling department that we calculated earlier. Okay, I'll slide a little bit down and just to show the footnotes of the various calculations that I described a moment ago.